Vantage Point with True North Wealth Partners is for our clients and those wanting to learn more about what's really going on within the markets and economy, as well as overall financial planning topics.
Hi, everybody. Welcome back to Vantage Point with True North Wealth Partners. I'm Andy Smith.
Eric Susi.
All right. Episode number 3.
We did it. Three's a charm.
They haven't kicked us off yet.
Not yet.
All right. Well, welcome back, and I hope everyone had a good Labor Day weekend. Would you guys have fun?
It was pretty good, actually. Fast, but good. We actually had a little s'mores in the camp out back in the fire pit, and then fishing with the girls. So that was fun. I caught a couple.
It's always fun.
Yeah, a little bluegill and largemouth bass. So it was a good time. And, how about you?
Yep. Yeah.
Family head south or?
Nope. We stayed home, and my son's birthday, and just hung out. Yep.
Caleb. All right.
A little shout out to Caleb.
Yeah.
Big 1-7. So yeah.
Good.
Yeah. Good times. So still crazy times out here with, of course, COVID still going on, very much so, and still looking at it, just the impacts of that, and how does that look? Looking out into the atmosphere.
That's fine. As far as the latest, the trajectory, as you'll see, with the dot plots there, U.S. obviously still leading as far as the most cases along the total confirmed case line there. Second place. Remember last month we talked about India was sneaking up. Well, they're in second place now. They beat Brazil, so they now have the second most confirmed cases is India. Still on a daily basis, they have the most daily new confirmed cases on a daily rate than U.S. and Brazil as far as the daily caseload. So still there, unfortunately. Obviously we had the trajectory, the downturn, up spike. Now we're going back down a little bit. We'll see how things pick up here with fall and school opening and
sure, yeah,
all that. But with the other graph that we like to share with you, a lot again busy slide, but a lot of good information as well. But the good news is the death rate is going down overall. Things are looking better, and in terms of the vaccine, things of that nature. I'll just give you an update too. Remember my aunt who was admitted?
Yeah.
Actually, she was treated with the plasma. So the plasma does work, folks. So that's what saved her. Otherwise, she would be dead.
Wow.
So she's 87, and today actually she gets released to her new home, so a new assisted living. So I actually dropped off the TV for her new room yesterday. I was doing that at the new assisted living facility. So she's doing better. And so nice thing is the plasma antibodies did help. That's, she probably would have died if didn't have that.
Wow.
Probably health ailment, something else will probably nab her down the road, but at least COVID probably will not get her. And my other aunt, Margaret, she turned 91. So we saw her over the weekend too, at her nursing home. So it's amazing. So they're still doing well, hanging in there. And
Very good.
So
good.
Economy-wise, things are coming around, huh?
Yeah, the economy's bouncing back. It looks like, and with the virus, and it just the over impact to the economy and / stock market, right? Like, what's that look like? What what's our outlook? What are we thinking? How does it impact our clients when it comes to the investment management piece?
Yes. Yeah, we made a move, and we'll talk about that in just a moment. But in regards to like trading volume, how we track that, almost on a daily basis here. So again, this is for me, Eric Susi, and you'll see this as well. The trading volume right now has dropped even more. In July, it was 5.7 billion trades. August, 5.5 billion trades per day. And last month turned out to be about 5.2 billion as far as the overall tally rate. So it's dropping down. So 5.2 billion trades per day, which is still 40% higher than in 2019, as it was 3.7 billion trades per day. So that's where we stand, and you can see the spike up in the March time as far as the volume. Then it went back down. The green line that you'll see is the Fear of Greed Index. You can see how that spiked back up, and that was over 80 or close to 80, excuse me. Just a few days ago, last week, that's where it was getting back to nosebleed. levels, which we weren't seeing back until January of earlier this year. So that's why you have to be time and space, full cycle investing. You have to give it patience as far as finding an opportunity to push new cash back in, and that's what we did just recently. So that's always gives you a steady rudder as far as not acting too emotionally in regards to timing things out, and why one has to have patience, time, and space. So, and as far as overall, what we did recently, so again, timing wise, we waited, opportunity markets pulled in. So the S&P actually pulled in 7.1% over the 3 days. And then the NASDAQ pulled in a little over 10%. So with the little over 10%, again, starting last Thursday, Friday into Tuesday, Monday was a holiday, Labor Day. So, finally the old adage of 3 days down that came. So we had 3 down days. We pushed some of the cash in and looking for that springboard effect, of which, today happens to be an up day, but still plenty more of opportunities between now and the election. The markets will be both up and down, obviously. So we'll fully allocate the rest going forward when we see another opportunity to do so.
That's right. Yep. Yeah. Time and space. You just got to be patient sometimes, but yeah, good. Yeah. I know another another component that we look at is the PE ratios, the price earnings ratio, which help kind of give valuations, right, to companies. Yes. So, I mean, I think at one point Tesla was a 500 bills.
Crazy. Yes. It was multiple. 500
billion.
Yeah.
They were valuing Tesla at. So, so anyhow, so just, just by looking at the chart, we can see that, the historical average, is 15.3 times earnings. So with the tech bubble that we had back in 2000, 2001, the PE ratios were as high as 24.5 times. Until just recently, the latest was close to the tech bubble amounts, which was almost just under 23 at 22.9 times
there
earnings.
You go.
So a huge indicator that, we saw that huge rush up over the last 3 months in the stock market, almost a straight up line.
Right.
And so even though it's good, right, you want to see your account grow. But, from where we sit, we're looking,
wasn't healthy. It wasn't a healthy.
Yeah. It's kind of blaring red, right?
Yes.
Like hey, we need to give it some time, give it space. The economy is still working through a lot right now. And so there's a huge disconnect between the stock market and with the reality of the economy. So anyhow, so we saw some of that, I think that, definitely plays into, okay, we're in a extreme greed, extreme overbought situation in the stock market. So that just tells us, let's just be patient, let this work out, and which we've seen the last few days. So so if you see the chart on the fear greed index, this is something that we monitor. It just shows extreme overbought versus extreme sold or oversold. Basically as the market has a run up, there's what we call FOMO money, fear of missing out. So investors rush in. They rush in kind of at the wrong times, push the market up, accelerate it up, and then on the reverse of that as well, which we saw some of this in February, March, where there was extreme fear, where investors are running to sell whatever they can. You get into an oversold situation. So it works both ways, but it's something that we monitor because again, you can't time it perfectly all the time, but you try to look to see where the index is, before putting money in. You want it to see, certain levels that we look for, on that activity. So, yeah.
No, I hear you. And then dovetailing with that, what the retail investors, you've heard us say before over the past episodes, the Robin Hoodies. So a lot of folks staying at home and trading, that's what they've been doing the past 3-4 months. So what also led us to have caution was the small trader call buying. Again, this came from Sediment, such as a lot of our charts. So here you can see it was 0.53. That was the highest as far as the ratio, 0.53 as far as the call buying for options. The last time it was that high was back in the .com era, so which was 0.52. So 0.52 was a .com bubble, and this time around it hit 0.53, which again you'll see on the chart. It's the highest since then. So that was a cautionary red flag signal. So that's why you just had to be patient. And not all things go straight up. Wait for the bubble to burst. It did burst. The NASDAQ had a 10% correction in 3 days, and we took an opportunity to push some cash in, like we said. And what's also interesting too, coming from the same report, is they said, the small traders become the biggest part of the options market. So, since mid-July, traders for 10 contracts or fewer. So one contract is 100 shares. So 10 contracts or fewer. So 10 times 1,000, 100 is 1,000 shares. But what's interesting, it's over 60% of the opening call purchase premium. So it's just distorted again as far as the small traders, less than 10 contracts, make up more than 60% of all the buying for the calls, for the option contract call buying, versus the larger traders and the medium-sized traders are under 20%. So that, again, is the retail investor getting in. And we've seen this before. There's ebb and flows, bubbles here and there. And this one just happened to be the retail exaggerating with using of leverage, which is called options. So we do not use options, but that sort of explains why and what happened. So people are probably wondering. That's the answer. And also, one little trend that has ended is, as far as NASDAQ, it ended its current 90-day streak, tied for the 14th longest streak ever back in 1988. So, meaning 50-day moving average, the NASDAQ had 96 straight days of being above the 50-day moving average, which tied its 96-day length of 1988, which is the year I graduated high school. So again, been doing this for a while, tracking everything. But 96 days is the 14th longest streak ever, dating back to 1971. So that's for the NASDAQ.
Yeah.
So a little other things to keep in mind. So it's been an interesting month. I know we've had things occur, but as far as we have a great guest, coming up here. So our strategic partner, Mike, he's a great man. We've used him, obviously.
This month's strategic partner, Mike Gatteri with Health Markets, is not affiliated with True North Wealth Partners or Stratus Wealth Advisors.
All right. Well, welcome back to our first special segment here, I guess, that we're doing. And we want to welcome Mike Gatteri from Health Markets. Mike is one of our strategic partners here at True North. And a lot of you might even work with Mike or know of him. And just want to welcome you to Vantage Point, Mike.
Well, thank you.
Thanks for being here in this crazy time that we're in.
Appreciate the opportunity.
And so if you wouldn't mind, just take a second, introduce yourself maybe, and maybe explain a little bit about your business. And
Yeah, so I work with a company called Health Markets. Actually, believe it or not, started September 11th, 2001. So you know where you were on that day. It was literally starting my career as everything happened that morning. So I've been in the industry now for 19 years as of this week. Started up in the Detroit area, moved down here to Columbus about 10 years ago. And so at Health Markets, we specialize in health insurance, life insurance, Medicare, disability, long-term care. We work with over 150 different carriers, so we shop it around and we find you the best plan. I think one of the most important things to know about us is there's never a charge for our services. So whether you work with me, whether you work directly through the carrier, you're not going to pay a penny for my services. So quite honestly, the way I like to look at it is we're basically free consultants for our customers.
Excellent. That's great. That's great to know. And so obviously with Medicare enrollment on the horizon here before too long, coming up in October, what, people hear a lot of different things out there when it comes to Medicare, different letters, different plans. What, just in a nutshell, I guess, what's kind of the alphabet soup, I guess, with Medicare enrollment?
Yeah, it can certainly be confusing. There are four parts of original Medicare, which would be A, B, C, and D. A and B are the two parts that you get through the federal government. So A is your hospitalization coverage. B is your coverage for doctor office visits and lab tests and x-rays and everything that happens outside of the hospital. Then there are two other parts of original Medicare that you do not get through the federal government, and that would be Medicare C and Medicare D. So the easy way to remember Medicare D is for your drugs. So your prescription drug coverage you would get through a private insurance company. And then if you wanted to get what's called a Medicare Advantage plan, that's part C. Then from there, you get into the alphabet soup of Medicare supplements, which have about 8 or 10 other letters in and of themselves. And so there certainly can be some confusion to it, but in its truest sense, if you can remember A and B through the government for your hospitalization and outpatient, C and D through private insurance companies for your prescription drugs, and then the Medicare Advantage plans.
Okay, great. And so if I'm new to Medicare, if I'm getting ready to retire, let's say in the next 4, 5, 6 months, what's the time? What from a planning standpoint, what timeline wise, what should I be thinking?
Yeah, so anyone who's turning age 65 should really start looking into the process about 6 months ahead of time. What we like to do is we do what's called a Medicare 101 with all of our customers. And that means as they come into Medicare, we explain much of that alphabet soup. We explain the costs that are associated with A and with B. We explain the pros and the cons of Medicare supplements and Medicare Advantage plans. And we do all that about 6 months ahead of time so that you can digest it, figure it out, start to feel comfortable with it, and then we give you a plan and a path to walk on for the actual enrollment of it.
Okay.
Because after that Medicare 101, we're going to send people home with homework to enroll in Medicare itself. Then we get back together and we pick whether they are a supplement customer or an Advantage plan customer. We'll do a list and look up their doctors, look up their medications, find the appropriate plan for them. And so it can be an involved process that takes sometimes 2 or 3 meetings. So that's why having a good 6 months ahead of time, so we're not jamming that all into one meeting, is the best way to do it.
Okay.
Now, oftentimes when you get people who are retiring, they may be over age 65 and they may already have part of Medicare. Because you'll automatically receive Medicare Part A whether you need it or not. As soon as you turn age 65, you're granted Medicare Part A from the federal government. And so at that point, someone would only need Medicare Part B through the government. And what's kind of quirky is in that situation, if you wait until after age 65, you can only enroll 2 months prior to retiring. So your timeline gets shortened. And so that's where, when people come in and talk to you and they're planning for retirement, it's always a good idea to kind of forecast a little bit out so we're not jamming this all into a very short time period.
Sure. Yeah, it makes sense. That makes sense. And what if I'm already retired? What if I'm already on Medicare? What should I be thinking of regarding enrollment dates?
So the annual enrollment dates, as of right now, are October 15th through December 7th of every single year. And that's your time to shop your current plan, to look at the plans that are out there today, to see what the new plans are going to be for the new year. I suggest that literally every single person confirm their plan each and every year because plans change. Your health changes. The doctors you see change. The medications you take change. And so all of these can make it to where the plan that was best for this year may not be the best plan for next year. And so it's always a good idea to reach out to your agent, to touch base, to make sure you're in the best possible plan. And let's face it, if you're not paying for his services, to take that 30 minutes or an hour to confirm that you're in the best plan for the new year, always a good idea. But to answer your question again, October 15th through December 7th are the dates there. And one thing I want to point out about that December 7th date, it's not like taxes. And here's what I mean by that. With your taxes, as long as they're postmarked by April 15th, you're good. With Medicare, the plan has to be in the insurance company's hand and has to be processed by December 7th. If it's not processed, it does not count. So if you fill it out and drop it in the mail on December 7th, it's not going to qualify. And now you're left with whatever plan you had last year because that enrollment for the new year will not factor in.
Interesting. Okay. Yeah, that's good to know for sure. So what are some pitfalls that people or clients should be looking at when it comes to Medicare enrollment?
I think the biggest one is just kind of putting it on cruise control and letting it run, right? You buy a plan, you think you're good with your plan, you just say, I've got something that's working for me, I'm not even going to bother to shop it around. With all the baby boomers turning 65, there's actually, believe it or not, 11,000 people a day turning age 65. Wow. And so with that many people turning age 65 every single day, the insurance companies are very much competing for business. And unlike other aspects of life where benefits are going down and costs are going up, in the Medicare world, benefits are going up and costs are going down. And so just because you had a plan that worked well for you last year doesn't mean that it's the best plan. So don't fall into that rut of, I've got a plan, it's working for me, I don't want to shop it around because what was the best plan last year may very well not be the best plan this year.
Okay. Good to know. Good to know. And well, obviously heading into election year, right? So we're not going to end 2020 and, nice and quietly, right?
Yeah.
So what, regarding the election, I mean, is there anything that, that people should be thinking about regarding the potential impacts of that on Medicare?
So one has actually already happened. It's quite common to see some of these things happen right before the election in order to, lack of a better term, win some brownie points right before the election itself. But President Trump just signed a major piece of legislation that will have a very significant impact on Medicare beneficiaries for next year. And that was a bill to help reduce prescription drug costs, specifically to help reduce the cost of insulin for our insulin-dependent diabetics. And what that's going to do is it's going to cap insulin costs at $35 a month. Furthermore, people will not fall into the donut hole. And for those of you who are watching and listening out there who have been in the donut hole, you know exactly how detrimental that can be. When people fall into this donut hole concept, they're responsible for almost 50% of their medication costs.
Wow.
And so to have that insulin, which could be $400 a month, only be $35 every single month is going to be very important. But again, just like anything else, it's not across the board.
Sure.
We're finding that this year some carriers are going to implement it. Other carriers are not ready to implement it. And so that will be one of the major changes for those who are on insulin that will definitely want to see if their carrier is capping their insulin costs at $35 a month.
Interesting. Good to know. Good to know. All right. Well, you said donut hole, and I just got distracted. I'm not thinking donuts.
It's not sweet. That's for sure.
And then what? And I guess just to wrap up, what any tricks or any tools or anything that people should know about?
Yeah. So again, with so many baby boomers turning age 65, the insurance companies are competing for the business. They're constantly improving plans. A lot of the carriers are really rolling out a lot of extras. The one that's most commonly known is what's called Silver Sneakers. That's a free membership into the gym, typically at the YMCA. But a lot of the carriers now are starting to offer basic dental coverages, basic vision coverages. They're giving free over-the-counter drugs. There's some carriers that are giving $20 to $30 a month of free over-the-counter drugs. So, your preparation H's, your pain medicines, your allergy medicines, all of that you can get for free. Another one is the Life Alert bracelets. The old I've fallen and I can't get up that you click on your neck. Some of the carriers now are giving that away for free. And so even if you don't need it, you can give it to someone else.
Sure.
Because they provide it for free. They're not saying that you necessarily have to use it. So a lot of those extras are out there. And, if you have two companies that on the surface seem like they're going to work for you, dig a little bit deeper, see which one's giving those extra benefits, because it could definitely save you some money and, be a nice, little bonus there for you.
Great. Yeah, that's good to know for sure. Yeah, it sounds like the companies are trying to compete more for the consumers, right?
100%.
So the consumer definitely puts the consumer more in the driver's seat.
Yeah.
When looking at some of this. But Mike, we appreciate you being here with us. Mike's around our office quite a bit, meeting with clients. So hopefully you have a chance to meet more of our clients here. So, but a lot to consider when you're looking at Medicare enrollment. And please, again, at True North, it's not just investment management. It's not just one piece of your plan, but it's about taking the entire plan and looking at everything together. And so, Mike is a great partner, and he can definitely help you guys with this. So.
Well, thank you. I appreciate the time.
Absolutely.
This is sort of unique, and these are just stats. My family like to go fishing as often as we can. I know you and your boys, you've done fishing as well. But with that said, this is from the Recreation, Boating, and Fishing Foundation. So this information just grabs and tallies up all the stats. So there are 50.1 million total participants fishing. That's the highest in 12 years. 3.1 million participants had newly participated last year. That's the highest in 5 years. But what's interesting, though, is female participation. Having two daughters, 17.9 million female participated in fishing. It's an all-time high. So they've been doing this for many years and decades. And breaking it down a little bit further, among girls, adolescents, that's been strong. So ages 13 to 17, the adolescent girls grew by 6%. this past year, which was the most growth in any female age group. So
Interesting.
yeah, it's just amazing how many, fishing is, with the COVID happening, people are spending more and more time fishing. So I've seen a lot of that just around the neighborhood and down by the lakes there. So as far as fishing, the last stat here, an overwhelming 91% of current fishing participants started fishing during their childhood. So that's why, you're showing your boys, my daughters, it's starting fishing early. So that's the lesson learned, I guess. Teach them how to fish for life, right? So versus only 9% of new participants were introduced to fishing when they were ages 13 and up. So again, just sort of summarizes why it's important to get outdoors, whether it's, just outdoor recreation in general. And then last, as far as the tip of the month, again, I like my cars in general. So the race is coming up. So there's an IndyCar race. It was Mid-Ohio last month, but it's postponed to this weekend. So this upcoming weekend here in September, we're going to be putting the band back together. All the guys going, jumping in a little Sprinter van and going to be doing our race up at Mid-Ohio for the IndyCar. But what's interesting is the RVs, it just exploded. So with the latest information, this is coming from a local paper here, in regards to more RVers are out there, more RVs were shipped to buyers in this July of 2020 than any month in the last 40 years.
Wow, it's crazy.
So you see all the people taking trips, and people, my kids' families, friends, they're going out on these little weekend day trips, going away on these RVs or renting them. Renting's big now. So I thought that was interesting. A good client of mine, Gary and Joanne, a little shout out to you. You're still out there, and I think you're in South Dakota right now. But they're in their RV. They have the Class A big behemoth one that he custom made. I think it was a Newman, if I recall, if that's the right one. But they went out to the Yellowstone, South Dakota, Wyoming, Montana. They started on August 2nd, and they're still out there making the way back now, and they're in South Dakota. So
that's great.
I have a handful of clients that have their RVs doing that. So this article does not surprise me at all, because people are loving it. It's a great way to see the country and have quality time with family.
Yeah, so, camping. I think Camping World stock was up through the roof a week or two ago. Yeah. So Marcus Lamona's, he's smiling.
Oh yes, he is. Yeah. He sponsors a lot of the races at the tracks. So they do well.
Good.
Well, good. All right. Well, we appreciate you listening in. And how about next month?
So we'll have Mike come in. Then next month we have from At the Core, Beth Probst will be joining us. So she is she's a kind of a local expert on college planning options, and it's not just 529s or the investment piece. But Beth is really good at kind of laying out a strategy for students. So if you are out there, if you have kids or even grandkids, it might be good to listen into or pass the episode around where they can get best information. You can actually meet with her, and she will lay out kind of a game plan. Like if you say, hey, I want my kids to go to this college or that college, what's the best way to help them to get in? She can lay out a plan, help with that. So she's a great resource.
Awesome. Look forward to that. And then, folks, we appreciate your time. Welcome. Glad you're able to join us for this episode 3. And as always, stay well, safe.
Absolutely.
Wash those hands and wear those masks. We'll see you next time.
Thank you.
You can reach this episode on our website at mytruenorthwp.com, by other podcast venue sites, or by calling us at 614-929-2715. Also, feel free to share this episode with friends and family and sign up for our weekly email market updates via our website. Special thanks to our producer Nathan, as we will be producing these episodes on a monthly basis. Investment advice offered through Stratus Wealth Advisors, LLC, a registered investment advisor, DBA True North Wealth Partners. Investing involves substantial risk. True North Wealth Partners and Stratus Wealth do not make any guarantee or other promise as to any results that may be obtained from this. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. No reader should make any investment decision without first consulting his or her own personal financial advisor and conducting his or her own research and due diligence.